I hope you can still hear. Please just confirm one more time that we're coming through by typing something in. Now my mouse is stuck. Brilliant. Okay, fantastic. So welcome everybody. I hope you can see the screen. If you can, you'll see that it's a 20-minute of the S&P future, and I think Tom will tell you all about that. But I've started the recording, and with that, I'll hand you straight over to Mr. Tom Williams.
Thank you for that, Peter. Yeah, Tom Williams here. Rita's here. She's in the kitchen making us tea and coffee at the moment, but she'll be here any moment. And she will be looking at her screen very closely. So please, we've already run one request to look at lumber. Well, we look at that when we're ready. And but if you've got anything we want to look at, please type it in and Rita will see it. And it actually helps us because it gives us leads. Now, right, okay, now I do the newsletter, as you know, every Sunday. And I can't remember exactly what I said, but looking back, I know it's easy in hindsight, and I'm sure I must have picked it up. There was a hell of a lot of weakness in the S&P 500, but we'll look at that in a moment. And it's always keep in mind that the cash market, right, the daily chart is very, very important to you as a trader, because that's where the equity lies. That's where the value of the market lies. And of course, the people that are trading big time in the S&P 500 cash market also have their eye on the future, obviously. And there's a lot of coming and going there, as you can imagine. So we spotted, I think Gavin sent out an alert just before the big fall yesterday. We spotted all that, of course. Now, it's interesting today because the market has actually gone up. And at the moment, we've actually gone long. What price did you say he went?
26. Close of that.
Yeah, okay, so he's gone long there, but he was long further on, but he's long here somewhere. Now, there's a reason for all that. Now, this is a 20-minute chart. Now, there's no special reason why we got a 20-minute up, because all the time frames are more or less readable. Some are a bit more obvious than others. But here, you see, if we go back, there's the decline for yesterday. Okay, fair enough. What? Oh, this morning, sorry. Oh, well, whatever. But anyway, looking at this morning, look. There is what UK time. That, when you reach down into fresh low ground, the spread is narrow, right? It closes down there. It says it's a simple test, right? Now, that is definitely a sign of strength suddenly appeared, right? The ideal thing is a down bar, fresh low ground, narrow spread, closing middle or high, volume is low. In some cases it can be high, it just shows buying. But in this case, the supply has absolutely disappeared. So it popped up a few bars on that, but then came down and tested, look. And that is a test. Excuse me. Now that is a test there. It's a test of this. And there's still no supply, look. Okay, so it pops up on that. But, okay, so it's hit a bit of no demand, but it came off, look, in a vigorous sort of way. And there's another test, look. This is really, I think that was the market opening there. Right, so you'd expect high volume. but that's plunged down to that area. This catches all the stops, shakes people out. They're all very, very nervous because of yesterday. Right. Dallas is here. She'd been to Buckingham Palace yesterday, telling me in the background to shut up. But anyway, sorry. Anyway, that is another sign of strength there, look. What's it say, Pete? It says 2-bar reversal. Now, 2-bar reversals are significant when you've got a decline and you've got all this in the background. Remember, it's the background that's influencing us, right? And the strength, we know it's strong because there's no selling here. That was a test. Went up at 1-2 bars and came off another one, right? But they want to make sure with the size of their orders they have to. And that was another share. They catch stops, mislead many trades as possible, and so on and so on, right? But that is definitely a buy signal there. And you could if you get, but you've got to live through these testing. But this is what you expect in the market. Now, when you get these falls like we saw yesterday, it's usually, now we know the S&P likes to have what we call shakeouts, where they have these violent down moves, right? All hell breaks loose. And it's really a shakeout. It's a way of shaking the market out. And by doing that, right, it makes the market strong because it allows professional traders to come in and buy at very low prices. And of course, that's what they're after. So here it goes up, right? And I said to Gavin, I said, look, this could easily be absorption volume here, right? This high volume here, look, absorbing anything around here, this old top. Expect a test. Now, that's what we hope from my analysis we've got here, a test. And that's why it's gone up a little bit. Okay, so now are there any questions about this? This is a 20-minute chart. Rita's here looking at the screen. No questions yet. What? People go.
In case any people are typing. In the meantime, Alan says, hi Tom, last week you recommended using a 50% retracement. It has helped me a lot and removed some confusion. I want to thank you for that tip.
Yeah, well, we don't recommend mathematical formulas, but that's about the only one that seems to have some sense, some accuracy in it. Now, why that is, I don't know. The poor Fibonacci was an Italian. He lived, several hundred years ago, and he figured this out. And it does seem to work. It's something built into nature, apparently. But trend lines work. I'll show you the daily chart in a minute to see how they work. So we don't use mathematical formulas because we don't have to use mathematical formulas. Somebody said to me, well, why don't you ever mention the open? Well, we don't use the opening because we're not using formulas. See, a formula, by its very nature, usually has to have the opening, a figure to jump off from. That's why we don't use it. You don't need it because a chart is a story reading to it. It's like a book. And once you learn to master it and read it, you'll never, ever regret it, I can assure you. It may take some time. It takes some people a couple of years to get their head around it properly because it's unnatural. If you go out with an estate agent looking at houses to buy or a house to buy, right, you usually have a fact sheet there. You look at it. Now, as a decent human being, you believe what the agent's saying to you and you believe what's on the printed sheet in front of you. But you can't do that in the stock market. They're devious, they're cunning, they're liars, you name it. It's the worst of human beings you can find because there's money there. That's the problem. And that's what makes it sometimes difficult to get your head around these volume spread analysis. So you just have to watch it. But it does work on supply and demand. There's no question about that. We can almost prove that to you without any too much problem because of the automatic signals that we've got. Computers do not understand flaws in your thinking. Computer does not understand flaws in your logic. You've either got it right or you haven't. If you haven't got it right, then it's either you've got the principle wrong or something. I mean, look, there's a signal right there, look. Supply, which is true. You've got here, shakeout, what's it say? 2-bar reversal. And you've even got something here, look. Potential, well, yeah. I mean, it's supply, and it's even right at the bottom. You've got an entry here, look. Simple test. We've seen that. Right, let's have it.
You just noticed the question came in from Winston while Tom was talking about green arrows and or indicators. Let me read the question. Can someone explain to me why it is that green triangles are usually under down bars and, sorry, blue triangles are under down bars? Is that right, Rita? Green triangles are usually under down bars, yeah, and red triangles above the green bars. I think you mean blue bars. What should you anticipate? So why are these green ones at the bottom of red bars and vice versa?
Well, green is like the blue. Well, it's a green arrowhead, isn't it? Well, it's like traffic lights, you know. At least you've got something to say, oh, it's not too bad. Go ahead. Now, put the cursor over that bar and press F1. I mean, to our surprise, we found out some people don't know that. And you get a text box come up explaining the best we can. Now, those text boxes aren't changed because the market principles never changed. That's been there for years. All these signals have. And that's how the markets work.
And also, Tom, is it worth saying why actually you'll never find a green triangle at the top of the blue bar? Because these indicate... I don't know if part of your question, Winston, was why are they there at all, or why are green triangles at the bottom of a red bar and red triangles at the top of a blue bar indicating weakness. Tom?
Well, you've got to pick a colour for them. People expect you to colour them something. But normally green means it's okay. It's traffic's going ahead. Red, of course, be cautious, be careful. There's trouble on the horizon. Does that make sense? I wasn't quite sure. Is that answering the question, Rita?
Yeah.
See, red, look. That means there's some weakness there, look. Right. That means that...
So really, when weakness appears, it usually appears on up bars.
Oh, it does. Yeah, you've got to remember that. When weakness appears, it has to be on an up bar. Because weakness, imagine you are a professional trader. You've got 50,000 contracts there. Now, the only way you can start selling those when you feel like it or when you want to is as the market's going up. You can't sell it in a falling market or we're going to lose money, a lot of money. And other professionals will be against you. They'll see you try to sell as the market falls. They'll market down even further, rapidly. You know, they're all at each other's throats. They don't like each other, professional traders, I can tell you that. They may be all friendly and have a drink and slap you on the back and all the rest of it. But when it comes to actually money, they're at odds with you. So the only way you can get rid of large amounts of contracts is on up moves, up waves.
So Tony is suggesting buy on down, sell on up.
That's right. Yeah, if you're going to. But the principles, once you learn to recognize them, right, they are quite accurate, because that's how the markets work. We don't catch everything because the parameters are changing so much, so constantly. But we will do, give us more time. We've got a very, very clever Russian programmer called Gregory at work on a new program. And we hope that will be extremely good. So you won't have to worry too much. But I'm not a programmer at all. Very few people, the skills don't really mix. You're either a programmer or an analyst. I may be able to analyze the markets reasonably well, right? But I'm not a programmer. I don't want to be a programmer. It's not my scene. And I can't see well enough now. Now this trade here is not looking quite so good at the end. It's going up on no demand, look. Any more questions?
Winston says the issue here is that the market keeps going down and the bars continue to be green. We don't have any green bars. So are you talking about blue bars, or if you let us know, that would be helpful, because it gets, can you explain? We have red bars and blue bars. We don't have green bars. That's what I am saying. Yes, but Winston is saying the issue here is the market keeps going down and the bars continue to be green. We don't have green bars. That's what I'm saying. So that must be your program, whatever you're using, your platform. What are you using, Winston? Because we can't see it, obviously. Just waiting for Winston to let us know. I meant the trade guide at add-in, you mean?
Yeah.
Peter, do you want to speak?
Yeah, so if it's a matter of choosing colours, they may come pre-programmed. If you want to change them, maybe go to the help. But even easier than that, if you get stuck, you can contact support at tradeguide.com, and AJ should be able to help you out. So it just happens that commonly, certainly Tom, Gavin, and I think many of us use blue bars if they close up, or red if they close down. But we can program those. But we could have changed them to purple and orange. But that's just the way it is. So it doesn't actually matter, just as long as you know what you're looking at.
Okay, Edmund's got to put a few points on this chart. He said this one at the time looks like an upthrust. That's his first point. So is that an upthrust, Tom? And the other one is 1928 a resistance at this moment? So he's saying, is this point here a resistance? So is this an upthrust and is this resistant? So, okay, if you want to point that out.
Well, the upper resistance of that chart, of course, is that line there. There's the trend line, look. Here. Now, this is not technically what we call an upthrust. It is a bit of a reversal and a bit of a sign of weakness, I must admit. But this is more like an upthrust. This is an upthrust here, look. There. You see, the professional money have seen this weakness here. They've seen this high volume. They know there's supply here on this top, right? So they know they have to have a test, right? So they think, right, okay, before we have a test, let's ram it up, catch some stops, mislead as many people as possible, right, before we go down. And that's what they've done. That's an up thrust. Now, on this particular time frame, there's no signal, but I'm sure if I trawl through all the different time frames, there'd be a sign of weakness on that bar. But don't forget, the software is quite sensitive, and slight variations and it won't come up, but we've done our best and we hope to do better in the future. Okay, but that's an up thrust there, but this is really more like a reversal, which is a bit of a sign of weakness. But we'll just have a look. It's Friday, but it still looks strong because of this in the background. That's definitely a shakeout. We saw there was no supply along here. They've rammed it up through this high look. There doesn't seem to be much supply on these down bars. To me, it still looks like it wants to go up. And that's a trend line, Peter, is it?
It's actually, what do you call it?
Oh, that's the top.
That's the 50% retracement.
What, there?
Yeah, top.
Oh, is it? Oh, I see, yes. Oh, yes. Yeah. Yeah, sorry, that line there and that one is the guidelines for computer to give us a 50% retracement. And there's the 50% retracement, which it went to, which is quite common. Now, of course, if it falls below the retracement, it means the market's weaker than you think. If it fails to reach there, it's stronger than you think. But that is not an up thrust, not as far as we're concerned. It is a weak bar, weakish look, even though we're long. But we don't care whether it's not, because if it's wrong, we're going to get out. We close a position. We don't hope, we don't pray, we don't do anything, we just say out. And that's what you need to do. Never, ever get locked into a poor trade. Never. That's the worst thing you can do. If you see a test or you see a principle, the market should respond to it. If it doesn't, there's something wrong. Now, before we look at something else, is there any other questions?
Yes. We're being pointed to the 60-minute and the 30-minute longer term. They show the rollover clearly. So, yeah. Yeah, there you go. Yeah? That's the 30. He says longer term. So let's, Peter, if you put up more bars. Look up, put the hour. Yes. He's saying 7 days.
Right, now we're going to look more closely, that's it, at a 4-hour chart. Now, unless you're a fund manager or something, I don't look at those long time views so much. I do look at the 4-hour chart, I must admit. All we're really interested in grabbing a few points, then going off and sit in the sun at the moment in the garden. Now, 4-hour look, there it comes, plummets down, look. And look at the volume coming in. But the thing is here, look, you've got that down bar on a narrow spread right? Low volume, look, there's no volume there at all. That means there's no supply, but you would expect it to be tested. Don't forget it's a 4-hour chart, so up it goes. They come down, look, and there's your test. Although it's gone up here, there's a little bit of supply presence in this chart at the moment, look. But this is strength in the background. That's why it went up. Can you look at lumber? Somebody wants to look at lumber. It's on the continuous contracts, I think, is it? Come on to something. Bear with us, folks. But once you get your head around this, you will never, ever regret it. For the rest of your life, you'll know more about the market than most people. Now, is that a daily chart? It is, yeah. We're trying to find lumber. Now it's falling, falling, falling. Can we see 20 bars?
Yeah, 10 bars.
Or, well, at least 20. Is it? Yeah. Okay, 10 bars. I'm sorry, folks, my eyesight's, I've got what they call macular degeneration, which is damn annoying. But I can see the chart. Now look, lumber. That's definitely a sign of strength right there. Why? It's a principle that we've seen in the S&P. It's a down bar, what we call fresh low ground, after being a substantial decline, right? Now, the narrow spread, the fairly hefty volume, closing near the high look or top quarter, must have been buying. It cannot represent anything else. Professional money have stepped in and are buying that look. Now it reacts on that by gapping up. Notice it gapped up, right? But you want to test somewhere along here. I don't know. You have to read it as it unfolds. But what we want to see is a down bar and make sure that the volume is less than this here. In that area. That's right. Yeah, I mean, lots of people give numbers out, but it's best not to forget about numbers. It's to say that area. So if you can draw a line sort of along there, look. If that market now goes up a little bit and falls back to that line, that area, and the volume is low, then it's going to go up. It's a principle. When strength appears, it will appear on down bars. Because if you're a professional trader and you deal with, well, some of them got 1,000 contracts or more, you know, you've got to make sure that you buy on the down bar. And they're buying, that's what causes a narrow spread. Because every time any panic selling comes in, they buy it. They absorb it. And that creates a narrow spread down bar into fresh low ground after a serious decline. I mean, the news might even be bad. I never listened to the news on lumber. But that's what you look for now. And that's a very good... thank you for the gentleman that called that in for us to look at that. I think there's an email somewhere. I think Gavin told me. But this is along here. This is well worth watching. Well worth following. That's definitely support you would expect for that now. Other professionals have seen this. And they say, oh, that looked good. We'll get in on this on next down bar, next wave down. And then it drops down to that area, that level, look. If the volume is low, that means there's no supply left. That'll go up. Now, oddly enough, these commodities like lumber and cotton, all the rest of it, in a way they're easier to follow because they're not distorted by, shall we say, a deluge of amateurs in there messing around. That's what makes gold and silver fairly difficult to analyze at times. Excuse me. But they behave themselves because the people usually are the top operators, they're specialists in this area. I mean, if you're a lumber specialist, you don't look at anything else, you specialize in this. But that's what you'd expect now. That is, without question, professional money have stepped into the market, one lot and buying. But now they've got to accumulate more, they've got to test, and then it'll go up. And that will be a good trade, considering how far it's fallen, which I believe is quite substantial, isn't it, Peter?
Yeah, it's got a good look.
Yeah. Yeah.
340 down to 400, 300.
And up here, look. I mean, that's quite substantial falls. Substantial falls makes the market vulnerable to one or more groups saying, right, the price has come attractive to us now. I'm going to have a look at this. But they can't hide their intervention, which is interesting. They can lie to you, they can pull rumors out, they can say bad news, all sorts of things, which they will do. But they can't hide the fact is, there's a down bar into fresh low ground on a narrow spread, closing almost on the high, with an increase in volume. They can't hide that. Now, most people can't understand volume. And I say most people. I mean, they say that E-signal, the daily charts, the volume is delayed by 1 day. Not the future, the cash. Is it? Well, now, if that is true, which I'm not quite sure about, to be quite honest, but I've heard this from several sources, if this is true, they obviously have to pay a higher premium to receive the live volume as it happens. Professional money know that there's such a lot of information in volume. They'll want a premium for let you know what that is. Which of course they don't want you to. They don't, and very few people understand volume anyway. So E-signal will probably save you money and not let you have the correct volume, waiting for it for 1 day.
Mystery. Simply because they do receive the moment-by-moment volume. They could add it up themselves.
Yeah, but I think, what Peter's saying is that they do have the volume, but it's a mystery. But I think myself, it's obviously something to do with the finances. If you can have delayed volume, they probably pay less to the providers. That's probably what it is. Well, I'm pretty certain that's what it is. And but they don't care because very, very few people understand volume. You could talk to thousands of people about the market, and they won't tell you exactly what volume is. Volume is the activity of the professional money. And on that activity, you look at the price bar. Is it an up bar? Is it narrow? Is it wide? What, you know. They won't tell you that. They can't tell you that. TV certainly won't. And newspapers, they don't know. So if you pay attention to that, you'll know a lot more than most people.
So in front of you now is a stock called Amazon, a US stock, and it was of my own personal choice to put that up to ask Tom. So I don't normally trade stocks, but I'm thinking about doing it on an end-of-day basis. And the other day, the day before yesterday, in other words, the close here, I saw this, what looks very much like an upthrust. And I thought, well, when I start trading stocks on an end-of-day basis, that's the sort of thing I'll be looking for. What's your view, Tom?
Well, don't forget, a true upthrust appears after you've seen a sign of weakness. Now, looking at the background here, we don't really have any obvious weakness, look. It's acting stronger than the index. It's barreling up here. It seems to be pushing here through supply to the left. On these old tops, there'll be thousands of people that are in there. They were a bit alarmed when they had this. Now, professional money know that. So to avoid them selling at that level, they gun it up on a widespread up like this on high volume. So that's actually a sign of strength. So you have to be careful here. Now, of course, we know the general index was weak, and that could easily represent the weakness in the parent company, in the parent index. Rather than short that, what I would now want to do is to wait here till you get a no demand up move back into this area, and then I'd short it. It is acting stronger than the index. It's making new highs, look, and you've got this behind you. So you've got to be careful in your analysis. Here you want to see a no demand up bar back into this area, then you could short it. Does that make sense, Peter?
Thank you, Tom. Yeah, why I didn't trade it because I'm not trading that, but one thing that struck me was it was kind of a surprise to see an upthrust there in a way, because there was no obvious sign of weakness behind. So when the upthrust appears like that, I've been talked into trades before in the past on a lower time frame, and as Tom says, it may not be a true upthrust. Now, we've had a request for crude oil. Now, that's up to date till yesterday, Tom.
Well, that's interesting, isn't it? This was up to date to yesterday. The cash markets fall and these go up. And there's a test there, look. This is a test. And this looks as if it's determined to barrel up through any supply to the top here. They test and then wham, up it goes. So that looks bullish. Especially now if you see a test, which it will do, somewhere along here. Don't forget, a test is a down bar like that, red, narrow spread, closing in middle or high, and the volume will be low, less than the previous two bars. It's even got a yellow box here, look.
That says no supply.
No supply. Well, that is a test. No supply. Now, the markets move on supply and demand. Doesn't matter whether you're looking at lumber or oil or what the hell, it doesn't make any difference. They all move on supply and demand. If there's no supply, then that means demand must be stronger than selling. That's why it's gone up. But that is a test. Nice one. Very nice. You are overbought. I'd probably need to redraw the trend lines. But that's oil. It looks very, very bullish at the moment. Especially if you get a test, which you would probably might do along here somewhere. Anything, Rita?
Robert would like to look at the euro 4-hour and hourly charts. No, It's 6E. 4 hour and the hourly. That's the...
Euro future.
4 hour Euro future. We're looking at it right there. Wow. I mean, it looks like, well, it is, not looks like. Sorry, shakeout there, look. That is really what they call a springboard or a shakeout. Widespread up, look, as it's pushing through any tops to the left. Right? It's hitting no demand at the top, look, but you're expecting a test anyway. So they ram it down, look. There's low volume here, back into the area here where there was high volume. That has to be bullish. What's that, crude oil? Oh, the euro, sorry. I mean, I say that because all these charts to me are the same. They all function, they all work on the principles of supply and demand. And the fact is you've got human traders in the background trying to confuse you, trying to mislead you. And they do that by using rumors and news and anything they can, believe me. But they can't avoid the principles of supply and demand. That to me, although it has fallen quite a lot, but the
hourly as well.
yeah, look at the hourly, Peter. Yeah. See, we've got this huge fall here, and it goes sideways, still falls. I'd like to have seen more of a narrow spread as we've seen in the previous ones. Man, you do have a narrow spread here, look. And there's actually a signal on it too. Well, what selling climax means is a very high volume, but on that high volume, it must have been buying, right? We call it a selling because somebody's selling, but professional money are buying it because of the narrow spread. Now that could easily want to go up. That's how I would look at it. But I would strongly advise you to make sure you understand and recognize the principles involved, because you can lose money so easily here. It's not true. The market is very, very devious, very, very cunning. Yeah, so it's just holding its own, but it's not really. Well, I still think it looks bullish. Still think it could go up. Well, we'll see. See, all you can do is to read it as it unfolds. But whatever happens here in this leading edge, you can't get away from this in the background. And that is a definite shakeout there. And if we go further back here, we can see that there was no supply on here. Went up, had a shakeout, look. Now they can't get rid of that. And that's why I think it could easily go up. Very easily. Because they can't change the background. That's what happened in the past, the background. But here you can't trust them at the leading edge because they're going to lie to you. They're going to give you rumors. There's all sorts of things they will do if they can get away with it, to mislead you. They're almost like con men, really. You see, if you ever meet a con man in reality, you'll find that they've got very pleasant personalities and you like them. Now, if you don't like an individual, how can he con you? Like, you can't. But you'll find that most of these con men, well, all of them that I've ever come across, is they're always very pleasant, always helpful, and give you a big smile. And you think, oh, he's quite a nice guy. But that's how they con you if you're not careful. So you can't trust anybody in this market by what they tell you. And they know the routes to put out false rumors, various people. They will have a list.
Any more questions, Rita? Rita says, yeah. I was while Tom was talking, I was looking at this chart here. This is a 3-minute chart of the S&P, and I noticed this weakness. Now, before the weakness showed up on that bar with the volume, it showed up on the previous bar. No demand, and I don't get caught anymore, at least not usually, because what used to happen to me, I'd see that no demand and think, right, well, it's likely the next bar is going to be down. Take a trade, but I acted too soon because I was sitting there watching it go up and I think, what's going on? Of course, sure enough, as Tom's always more often said, the smart money, if you like, will see the weakness, so they think, okay, we'll mark it up first, and then bring it down. So that's something to watch out for. I'll pass you over to Rita.
Yes, Julius would like GMCR, so US stock. GMCR. Not there. M for mother.
Right, so that's up to date to yesterday, end of day. And would you like to have less parts?
Well, yes, I mean, yeah, there's your initial weakness here, look. No, markets don't like ultra high volume and up bars. And that's what knocked that sideways, look. But because the general market was probably, it's a daily chart, right, was very buoyant in this area, it's held us up. But here, as you go along to the end here, this does look like potential upthrust, and it does look like a top reversal. And that would be because of this weakness in the background here. And the fact is it went sideways. Now they could easily take advantage of a weak market, or apparent weak market. But it's a little bit of a mixed bag here. Although it came off here, right, it's actually going up there. So we have to take this with a pinch of salt, I'm afraid. It's not quite clear, to be quite honest, because if you were assuming this was a weak stock, which it looks on the surface of it is, you would not expect it to respond to any parent index as it goes up. Yeah. Unless if this finishes up, this current bar as an upthrust, then yes, this would be weak. Because they do that, the professional money would be fully aware of what's in the background. They'd be fully aware of all this, right? And they would do their best right at the end, before a fall, to catch as many stops as possible, mislead as many traders as possible. And then if that suddenly turns around or falls on the low, you could bet your bottom dollar that's weak.
That actually closed on that, so we don't know what happened today.
No, this, unfortunately, yes. We don't have intraday chart of this. But from a daily point of view, that's how I would look at this.
The next question from Bruce. Would Tom take a short trade immediately after seeing supply come in on a clear downtrend?
You should never really short unless the market's going up on no demand after weakness has been seen. I mean, some traders, there's all sorts of ways to trade this. I mean, there's no right or wrong way. I mean, Gavin's very good. He sometimes chases the market, but even he usually likes to short on an up bar and buy on a down bar. Because if you don't get in the habit of doing that, surely you're going to get caught sooner or later. Sooner than probably later. Because the market is so devious, it would pay you not to do anything unless you fully understand the principle involved in what you're looking at. Okay?
Okay, Yad would like JCP. Hang on. JCP. This is JCP. It's for Tom.
What was that stock you just had up?
That was the weekly of the same thing.
Put the weekly back up. Now this bars, so sorry, I can't see that. Well, look at the weekly chart. There's some very unpleasant weakness there, look. Markets don't like ultra-high volume on up bars. And that fulfills that. That's why it's come off, look. Is that it? Oh, that's it. Now, markets don't like ultra-high volume and up bars, right? And that's why it's come off for 1, 2, 3 weeks. We're into the 4th week now. So there's an example there. You don't want to get locked into these poor trades. Now don't forget, I know there's a green arrow there. Test. Right, but if you read the dialog box, it's not valid unless next bar is up. And that's one reason why we definitely color these bars red. Next bar is down, look. So that's an invalid test from us. Right? It's a failed test. It's failed because of that weakness there, look. Keep in mind, markets don't like ultra-high volume on up bars. And there's the proof right there, look. See that time after time. If you were long on that, it's best to get out. If you wanted to have a put option, right, you'd expect that to come off. And there it is. Anything else, Rita?
Christian saying, if we have a small difference between programs, what is the best one that we should use and the data feed?
I'll be quite honest, I've never seen any of these other programs that Gavin's got various programs to come up with. They never consulted me with any of them.
Not forget the one good thing about VSA is it's not highly reliant on perfect accuracy. It's all relative.
Well, Peter, you tell them that.
Yeah, so I had that question some time ago. Should I use eSignal? Should I use real-time data? They're both data feeds that are available for the Trade Guider software, which you see. So I actually tried both over time and compared from time to time. And what I noticed was that overall it didn't actually matter. So sometimes the volume will be off on one compared to the other, but it didn't matter because in the context of the whole chart, because VSA relies on relative volume, it doesn't actually matter. And that's all we can say. And don't forget that all this data we get from various suppliers just seems to be different. It depends who you get it from. If you, especially with Forex, if you get Forex from your broker, reliant on his own trades, if you like, or his own brokerage, it's bound to be slightly different from the great collection of the masses. So what is the correct data? Well, it just depends where you get it from. But as long as it's more or less correct, if you like, or more or less the same as everything else, then you're on the right track. So there's no actual answer to that question, which is the best, because I don't think there is.
Well, the only thing I could say is, do the signals work? Because they're looking at the parameters, up bars, narrow spreads, high volume, low volume, what's happening in the background in some cases, and so on. So if you've got a chart that seems to work and the signals come up and they seem quite good, stick with that, but learn to recognize the principles as they unfold. And you're up against a devious lot, so don't forget that sometimes even sitting waiting for something to happen can be a trap for you. You know, it's how the market is. But it's there in hindsight, which we've shown you. So I apologize for that. But if it's there in hindsight, it must be there at the leading edge. I mean, Gavin and I, we can recognize most of the principles as they appear. And Rita and Peter here are very good at it too, especially, well, Rita likes the upthrust on the Dow. We always pull her leg, poor thing. You know, but she's red hot on the Dow upthrust.
Thank you, Tom. We have a few jokes about it. Robert is saying, I have a question regarding the software that Grigory is working on. Is it a new version of Trade Guider or perhaps some new VSA perspective of the market? Peter?
Well, Tom will probably answer, but as far as I know, I've got no idea what it looks like. I've not seen a copy. I'm not sure. Gavin could answer that. Under development. As far as new VSA principles or anything else, I'm not sure what the phrase was. What was it, Rita? A new VSA take or perspective. That's probably not the case, is it, Tom?
Well, the only thing I know about it is that they're working on it. But I know these things are quite time-consuming. I know from my own experience. I mean, I told you all about my trending system that I figured out. At one time, I sat for 8 months every day looking how to figure out a decent, really good trending system. One that actually worked, you know. And I had great difficulty in the end because most of them, or some of them, could not pick the lows. And it was suddenly, market would be going up, showing it was still going down. Well, that was obviously useless. Until I was sat there realizing that the simplest way, you've got to keep things simple if you can, is the professional money, once they're in a move, their biggest fear is other people coming in and selling into their move. So what they do, they make sure that the close is higher than the close of the previous bar. That means it's gone up, right? That keeps people at bay. People don't like selling into a market that's going up. Following that, we have rules, and the rules are very simple, right? Colors the bars blue, it's bullish, allow for one down bar, ignore level bars. Level bars come up black. The one down bar will be a test of some sort. And if you look back on these charts, you see that actually works. So I figured that in no time. So it's best to keep things simple if you can.
Okay, we've only got time for one last question, and the person who was first with that at 6:05 was GR. Scalp trading is very different from longer term, such as even swing trading. I realise that Tom scalp trades, so it fits more that he does not look at only a few bars, but often the background, even a few bars back, gives other thought processes to the decisions on the fewer current bars. What does Tom think of looking more often at bars back from the current few bars on the current screen?
You got it wrong, because I always look at the background. Always. No, you know, I mean, I'm going to do a newsletter Sunday, and I'm going to concentrate more on showing you the daily cash on that. And it's the background that's important. I always look at the background, always. So it's all very well saying look at the current bars, which I do, but the background is very, very important, because that's where the danger lies. Does that make sense? Well, it does, because that's what I do. It's the background. Now, very few people seem to understand that. They say, well, what's last week or the week's got to do with now? Believe me, it does. It's the background that's important. You think about it. If you're a professional trader, you can't risk losing money when you've got 5,000, 6,000 contracts or more on the go. And imagine you're going to a bank for a loan, right? So you have a nice shave, you put your best Sunday clothes on, right? You go see the bank manager, give him a big smile, all the rest of it. Now that might be all very well, but what the bank manager is interested in, what's your background? Do you have a good credit record? You know, what sort of guy are you? Have you got a criminal past and all this sort of thing? That's what he's interested in, and that's what he works on. If he's got any sense, that's what they do. Well, I know they do. It's pretty obvious that's what they do. The background is very, very important. And if you look at my newsletter Sunday, hopefully, cash market, that's where the equity lies. That's what I point out. We knew there was going to be a fall, trouble, because of the weakness in the daily cash market. That's where the equity lies. That's where the value of the market lies. And those guys that are trading the cash market in huge amounts, they're the ones also trade the futures.
Okay, that's it, folks. So thanks for coming along. Where are we putting the archive? Somebody asked. Who asked that? Winston. It'll be on the VSA Club under, I think it says archives, actually. Webinar archives. Webinar archives. It'll be under there. Okay, well, thanks for coming along, folks. Hope you enjoyed it as much as we did, and we will be doing our newsletter, or Tom will be doing the newsletter with our assistants on Sunday. And I'm not sure if there are any more seminars this week. Sometimes Gavin does a closing bell, but not always. Sometimes it's more the opening bell on Monday. So it's not doing the final bell anymore. So with that, we'll say thank you very much, and we'll see you all next week.